Welcome to another episode of Dollar Rupee Saga. Well, the US 10-year yield has begun to cool. USD INR traded flat throughout the trading session, waiting for two key inputs: FOMC Chairman Jerome Powell's meet at 11:30 p.m. India time and the RBI's interest rate decision tomorrow 10 a.m. India time. Fed's Bostic stated yesterday that two more hikes is needed. He further added that it's necessary to investigate whether the January report was an outlier report. If required, the FOMC could return to a 50 basis point hike. Neel Kashkari, president of the Minneapolis Federal Reserve, stated that the strong jobs growth is evidence that the central bank needs to continue to raise interest rates. He believes that the Fed's benchmark borrowing rate should reach 5.4% instead of the current consensus of 5.1%. Kashkari believes that more rate increases are required. The potential volatility of the dollar in the short term will continue. The market is going to be choppy. The dollar will continue to gain strength if data remains good, and the Fed will be forced to continue rate hikes even further. However, the US dollar is likely to weaken due to other factors such as a slowing economy and easing inflationary pressures, which will lessen the upside risk of the Fed funds rate, but we won't see it happening until the second half of this year. Meanwhile, Fitch Ratings has published another report. As per their findings, the amount of money owed to Indian banks by the Adani Group is not enough to produce a substantial risk. Even under a hypothetical scenario where the Adani Group enters distress, exposure for Indian banks should be manageable. However, one point needs to be stressed here is that there is a risk that the state banks could face pressure to provide refinancing for Adani entities if foreign banks scale back their exposure. If it happens, the coming days we may see pressure on rupee. Thank you for watching. Stay tuned.